Hello there, this is James and you're watching OneRoyal and it's live. In today's program, I want to talk about how just like that, 3 announcements has totally changed the mood of the market. It's gone from complete pessimism to optimism like that. And I also want to talk about the implications of that on the market and whether or not the market is kidding itself. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yeah, realistically, like that, it's all gone. All the fear, all the nightmares of tariffs and the impact it will have on the market, all the recession fears in 2025 is disappearing. Just like that. Now, with the bulk of the tariffs on goods from China paused for 90 days, happy feelings have returned to the market. All because of that. All because of that. JP Morgan, for example, is JP Morgan's chief US economist, Michael Fellini, he has said this: the administration's recent dialing down of some of the more draconian tariffs placed on China should reduce the risk of the US going into recession this year. He then went on to add that we believe recession risks are still elevated, but are now below 50%. In fact, it doesn't stop there. Goldman Sachs economic team moved its recession probability for the next 12 months down to 35% from 45%. And you can generally see this across the board. Now, if you can have a look, and I'll bring this chart up and make it a little bit bigger actually so people can see it. As you can see, the height of Liberation Day, when it all kicked off, recession odds was very, very high. And you can see the same with the S&P. It dropped dramatically. On the back of, say, 3 announcements, okay? First of all, started off with the announcement of the trade deal with the UK. And then, of course, more importantly, the announcement by the US and China on Monday that they were going to reduce tariffs against each other for 90 days. Recession odds has dropped dramatically. And you can see the S&P has really, really benefited. In fact, the whole attitude has changed completely because Goldman Sachs, again, going back to Goldman Sachs, they've also changed their forecast for how the S&P 500 will end the year. Now, they believe it will now end the year around 6,100 points. Their original estimation was 5,900 points. And stocks in general has recovered the quickest in the news of good tariff news. Oh, not this one, sorry. I want to show you this one. Sorry, got confused. This one here. So here's something else that's really interesting. Now, if you have a look of some of the last couple of crashes and recoveries is taken for, say, the S&P 500 or the stock market in general. Okay, So you have, say, you have the .com, 9/11, for example. It fell 51% over 638 days. It took itself 1,165 days to recover. The GFC, the credit crisis, obviously, 58% it dropped over to 352 days. It took 1,009 days to recover. We look at COVID, inflation crisis. Well, no, actually, look at COVID first. COVID, it dropped 35% over 23 days. It took it 103 days to recover. Inflation crisis, Ukraine, it fell 28% over 195 days. It took it 317 days to recover. Tariffs, all from Liberation Day, April the 2nd. It fell 21% and recovered over 33 days. Now, again, this again is all down. In many ways, you can look at it and say this has been self-inflicted. This whole thing has been self-inflicted with Trump's tariffs and the trade war and things like that. And there's another announcement which has also given the market a bit of a boost. And that was the fact that the US CPI was announced lower yesterday. Don't forget, the market was really looking at this reading, really thinking this was going to be the first indication of what the impact of these tariffs are going to be on goods. But in fact, it was the opposite. In fact, inflation came in the lowest in 4 years. Don't forget, year on year came in at 2.3%. The expectation was 2.4%. So it came in lower than anticipated. But here's the thing as well. I don't want to put a cold water on fireworks or dampener on fireworks. But the last time, this is the lowest level it's been in 4 years, but the last time it was this low was 2001. Okay, and that was just after we all started recovering from COVID. If I pull up it, make it a little bit bigger so we can see it. So around 2001. Then after that, that was the start of the dark times. That was the start of the inflation crisis. But now, okay, in many ways, these tariffs have not kicked in yet. They've not kicked in. They have not kicked in yet. I don't think in many ways the readings for tariffs and trade we won't see till maybe June time. So this is the other thing. This again is the question. It's a question I want to open up and ask the room as well. Open it up and ask you guys and see what you think. Are we at the moment just getting very excited by some good news, and we're not looking at the bigger picture? Let me know your thoughts. Let me know your thoughts, because though indeed the S&P 500 has wiped out pretty much most of its losses, which it's experienced since Liberation Day, and the tech market, which we'll look at again in a moment, is doing very well, especially Nvidia with some recent developments, which we'll go over as well. The question I have to ask, and I have to open up, and again, I'm opening it up to everybody to let me know what they think, is that small businesses are still struggling. They're still struggling. They're still struggling because even though, okay, yes, we've got a reprieve with US and China, reprieve with the UK, there's two factors which is in the back of my mind, which is worrying me slightly. And that is, A, small businesses are still suffering. But here's the other thing. Tariffs still exist. Okay, 30% for 90 days on China. China 10% for 90 days. There's still 25% on cars, imported cars, except from the UK, which is 10. US has still got 25% tariffs on automobiles and light cargo trucks. There is still 25% tariffs on steel and aluminium on all countries except the UK. There's still a 10% baseline tariff on all countries. And here's the other thing. Here's something else. That 90 days reciprocal tariffs delay is approaching. We're coming up to June. Don't forget, 90 days. 90 days is soon to expire. So those reciprocal tariffs will come back into place. So the likes of South Korea, Japan, EU are running out of time to get a deal or to organize a suitable deal between the US and themselves. Now, don't get me wrong. I'm glad the market is in a good place. It is positive news we're getting that China and US are putting a delay, a 90 days extension on their tariffs with each other. That is good news. But I know the trade deal between the EU and the US is going to be more difficult. And there's reciprocal tariffs. It's soon going to, the delay is soon going to expire. Soon going to expire. Anyway, enough of me waffling along. Let's have a quick look at the market. Have a quick look at the market. So first of all, let's have a quick look at obviously the S&P 500, which, like I say, is practically wiped out a lot of its losses it's experienced since Liberation Day. It hasn't quite reached the highs yet that it had back in February. It hasn't reached the highs in February, but we see what happened on April the 2nd. It has got its gains back from that day. Currently, as it stands, okay, trading sideways on the day, but again, it's got its boost back. And like I say, it's one of the fastest recoveries ever after a big crash like that, after entering a potential bear market. Dollar index, again, also we have a look at where the second was. Yeah, again, look, Liberation Day, again, it's claimed back its losses from Liberation Day. Hello there. Hope you're well. Nice to see you. Hope you're good. Hope you are good. Thank you for saying hello. Don't forget, guys, this is indeed a live show. So you can jump in, say hi to me. But like I say, more importantly, I want to hear what you think, so we can have an open discussion about it. Let me know your thoughts about it. So yeah, like I said, go back to S&P for the year to date. Again, it's managed to recover quite a fair bit now. Still only negative 0.22%. Dow, okay, on the other side of things, hasn't quite. Well, it's just about recovered its losses from Liberation Day in general. Hello there. Hi, Lisa. Nice to meet you. Thanks for saying hello. It's really nice. I like when people jump in and say hello and stuff like that. It's really cool. Really good. I like it. I like it a lot. So yeah, and let's have a look at the Mag 7 because, and I want to talk about Nvidia in particular because they're performing really, really well. Because everybody talks about the Mag 7. Mag 7 is what drives the US stock market. It's what carried it. It's what's made the bull market, so to speak, exist. You got Tesla so far up for the day, 2.52%. Still got a bit of a way to recover for the year, though. It's had a very, very, very tough 2025. Still currently down 12.20%. Meta is currently up 0.12%, tepid, but year to date is now turned green. Don't forget, all these companies are in the red for a long, long time. Microsoft in the green for the year, so 6.23%. Amazon slightly down for the year so far, but not as bad as it was. Currently down for the year 5.04%, down slightly for the day. Alphabet up for the day, and has it gone for the green for the year? No, still not quite recovered from the losses of this year. Apple, again, not quite recovered, but obviously Apple's going to benefit from these reduction in tariffs with China and the US. 90 days. So it's going to benefit from that. Up for the day is obviously 0.5. But this is the company of the Mag 7 I want to talk about. It's got exciting news. NVIDIA is up 1.80% for the day. Year to date, I can find the numbers. Year to date, it is now, was yesterday down 3%. It's now gaining traction. And NVIDIA is driving the Mag 7 in many ways, because don't forget, these tariff reductions with China is going to benefit NVIDIA a lot. As well as that, with President Trump now currently doing the Middle Eastern tour, okay, and he's done obviously a very big military deal apparently with Saudi Arabia, one of the biggest of all time apparently, 600 billion. But NVIDIA is going to be allowed to access the Saudi Arabian market as well. This is why NVIDIA has got a much needed boost. A, because it's suffering Liberation Day, and B, it was still licking its wound from DeepSeek a little while back. But that's how the market is currently looking at the moment. Again, like I say, don't forget, these are obviously questions, you can ask me questions or share with me, more importantly, your opinions. Let me know what you think. Do you think this rally, this relief rally, shall I say, is going to continue? Have we literally turned the corner? Is the nightmare indeed over? Or is the nightmare still there, just maybe not as bad as we thought it was going to be, but still bad? I mean, there is a number, Moody's Analytics, they still believe that inflation will go up around about 3.6% by June. So like I said beforehand, hello, James. Hello there. Hello, Jessica. Nice to see you. I hope you're well. Hope you're doing really well and hope you're having a good day. Thank you for saying hello. I really appreciate it. I really do. So let me know your thoughts, because I still think that, yes, we've had some positive news, very positive news over the last couple of trading sessions, as you see with the market. And like I say, this is one of the fastest, if not the fastest, recovery of the stock market after any real dramatic crash. So there is good, but I can't help but feel still that we're not quite out of the woods yet, so to speak. There is still issues. There's still tariffs, which has happened. So prices are still going to go up. That doesn't change. That doesn't change at all. That doesn't go away. So prices are still going to increase. Can you please give me an insight into gold analysis? Have you watched my programs before? I love gold. And yes, I'm going to get to gold. Don't you worry. It wouldn't be, I'll tell you something now. It would not be one of my broadcasts unless I talked about gold. So that's a nice surprise. But yes, I will definitely talk about gold. I'm coming up to that, along when I talk to currencies. In fact, actually, let's get on and go back onto the market. I think it's time for a currency update, which, of course, I will talk about gold as well. I'll save gold to last, because I always talk about gold. I do. I'm a gold trader, you see. It was my first love. It's the first thing I ever traded when I started back in 2006. When I was trading gold, it was trading at $636. And that's how long ago. That's how old I am. Anyway, let's start off with the currencies, and then we'll come to gold, because gold is approaching quite an interesting level. And I don't think, it's finished. Anyway, euro, we've seen a little bit of a weaker dollar over the last couple of sessions. Don't forget, dollar really benefited over the last couple of trading sessions as well. The dollar index was back above 101, and the euro was under pressure, actually touched at 111. But since then, we are seeing a weaker dollar, mainly down to maybe a little bit of risk appetite going on to the market because of the happy feeling. The same way we can see that with the sterling as well, which is again now back at trading just below the 133 level at the moment. And I can say the dollar index is now back below 1.01. So again, we are seeing a weaker dollar, mainly because I think a little bit more risk appetite. But I think, again, he's saying that we are seeing the yen performing a bit stronger against the dollar as well. But yeah, we are seeing a weaker dollar at the moment. It's not performing that well. But moving on to gold, my favorite. Now, gold has had one hell of a year so far. Like I say, currently up 21.29%. Obviously, it's became a big safe haven appeal. And yes, we do have a very happy feeling in the market. This is why, for example, even though we got a weaker dollar, the safe haven status for gold is waving currently at the market. But this is why I don't think that we've had an amazing bull run, one of the most craziest bull runs I've ever seen with the yellow metal ever. I still can't help but feel that any sort of sudden development, especially when the market realizes, yes, we still have tariffs. Yes, we still have the 90-day expiry. All these trade deals aren't as easy as we think they should be. I still think there is still going to be more of a safe haven appeal for the yellow metal. I mean, this is on the daily. We can see how long this uptrend has been going on for. And like I say, a key area of interest for me, or psychological level of interest, area I'm looking at is $3,110. Here's the other thing about gold as well I want to bring up. Central banks are still buying up reserves, gold reserves. So they're still stockpiling. So there is still a demand for it physically. So yes, we're experiencing a couple of trading sessions of gold under pressure because there's a happy feeling, which often happens. But it would only take a turn of a screw, one slight change, when the market realizes there is still many more obstacles to come for it to start getting a boost again. Don't forget, many central banks, Morgan Stanley, Morgan Stanley, JP Morgan, Goldman Sachs, they all have got their gold price forecast around 3,600 to 3,100. So again, I can still see it's keeping its shine a little bit longer, but just not in the short term. But again, there we go. Who knows for certain? Trading is never easy. But a great question, Jessica. Thank you for asking. Thank you. Are you a gold trader? Obviously you are. Do you trade gold? What do you think? What's your opinion on gold? Where do you think gold's going to go? Let me know your thoughts. Do you think it's this bull run is finished now, or do you think it's still got some legs on it? It's still got some where to go with it? Let me know your opinion, or anybody. Let me know their opinion on gold. Let me know what they think, etc. Oh, you're welcome. You're more than welcome. You're more than welcome. Again, it's just a view. What do you think now? What's your opinion? Where do you see gold? You a gold bull or a gold bear? Where do you see gold heading? Let me know. On another matter, like I say, don't forget, you can talk to me anytime you wish. It is a live show. But as well as that, if you're not part of the OneRoyal family and you're interested in finding out more, in the description of this little broadcast, there is obviously a link so you can check us out and have a quick look at it. So don't forget, you can indeed become part of the OneRoyal family as well. As well as that, if you're watching me on YouTube and you like this sort of stuff, you like this sort of content, what I cover, subscribe if you like. hit the notification button so you know next time we're going live. And if you put up with me, which I know is a big challenge because I'm very eccentric, put up with me, give me one of these. It's nice to know that you like what I do. Anywho, there's another thing as well I want to say. A lot of people I've noticed go back and sometimes watch the recordings as well, which is great. I love the support. I love any type of support at all. If you are watching the recordings and you have a question or you have a comment, put it in the comment section on the video. I will see it and I will reply to it next time I go live on air, which of course is every single day. So bear that in mind. Okie dokie. If there is no questions or no further questions, big shout out to Joker Gaming, Arman, Jessica as well for a great question, and everybody else who interacted today. I really, really appreciate it. That's the shows are always really good when people chat and say hi, because that's what it's all about. It's an online show. It's all about sharing ideas, being part of the community and discussing, having an open discussion about it. And that's what's the whole point of the show. Like I said before, if you're not part of the OneRoyal family, by all means, go to the description, click on the link, and find out a bit more about us. Anywho, if there is no further questions, not a problem. Just away from tariffs, away from this happy feeling, there is some other key economic data coming out. To end this week up, we have UK GDP. Be interesting for the sterling. EU GDP. And this is an interesting one, in my opinion. EU retail sales. EU retail sales. Now, I know for a fact that obviously CPI came in cooler than anticipated. With much rejoicement in the market, much happiness. But are we going to see a dramatic change in US retail sales? Is the consumer too scared to spend? And don't forget, we had a higher than expected number previous reading. Why? Because everybody was rushing out to buy goods before the tariffs. Are we going to see a dramatic change with that come this reading? So that's going to be a real interesting one. Anyway, if there is no questions or no comments, not a problem. Leaves me to say, don't forget, these little videos are for educational purposes only and in no way whatsoever shall be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.